Hello and welcome to our reporting season spotlight, your shortcut to the results that matter. I'm Juliette Sarli. Woodside Energy's full-year net profit more than doubled as it nears a decision on building a natural gas project in Louisiana that coincides with the US government easing regulations. Woodside reporting a net profit of $3.5 billion for the full year, up from $1.6 billion a year ago when it booked hefty impairment charges. A record year for oil and gas production in 2024 helped to offset a 6% drop in sales revenue as Woodside realised lower prices for its output. On an underlying basis, Woodside's profit totaled $2.9 billion, down 13% from a year ago, and it's paying a dividend of 53 US cents per share, down from 60 cents a year ago. Domino says challenges remain, but it's confident its strategic reset will bear fruit, telling investors it's committed to delivering profitable growth alongside franchise and shareholder returns. Domino's sales and earnings were lower, with same-store sales growth down 0.6%. Stronger performance in Australia offset continued weakness in Japan and France. The company hasn't provided guidance and it will pay a 55.5-cent interim dividend. Nine Entertainment is blaming weaker macro and advertising market conditions, along with the loss of Meta revenue, for a drop in its profitability, but it does say the calendar year has started well, with audience numbers and advertising interest improving. It says ad revenue in the March quarter is expected to be in the high single digits. Stan subscriber numbers are expected to consolidate in the second half after a 16% rise in the first. Nine says its cost-cutting program has delivered, but warns its strategic and cultural transformation will lead to further restructuring in full year 25 and 26. And Nine is expecting further cost efficiencies through to the end of full year 27 of more than $100 million, with between $10 to $20 million to be realised this financial year, on top of the previously guided $50 million. Zip more than doubling its first half cash earnings to $67 million, up from $33.2 this time last year. Cash earnings rising 117% as the number of transactions through its payments platform continued to grow, driven largely by younger US customers using buy now, pay later. Revenue in the half rose almost 20% to $509.2 million, but profit from ordinary activities was down 70% in the period to $23 million. Zip didn't declare a dividend. Shares up an impressive 17% today. Premium posting a 45% jump in first half profit to $5.8 million. Revenue in the period up 32% to $52.3 million. Premium reported an additional $6 million from OneView. Funds under administration rose 29% to $62.1 million, and a fully franked interim dividend of 1 cent per security has been declared. CFO David Coulter, meanwhile, resigning. We caught up, though, with Premium CEO Anthony Wamsteker on why he is seeing volatility in the share price.
I think, unfortunately, we are still a very small cap stock, and this has happened to us before. Where there is quite a lot of volatility in the share price. We clearly find that disappointing. It would be much better if it was just a straight line, but it's not that way. I think when the mathematicians do the volatility of our stock, it's more than double the market volatility, so it is very significant. And it just seems to be a case of if one or two shareholders, institutional shareholders, decide that they're going to sell the stock on a particular day, it takes a while to absorb that. But the overall trend has been upwards for a while, so I would like to think that the fundamentals of the business would warrant that the share price is more likely to move up than down over the longer term.
Mortgage insurance firm Helia posting a 16% drop in full-year profit to $231.5 million. Revenue down 11% to just under $533 million. For full year 25, Helia guiding insurance revenue in a range between $310 to $390 million. Helia to pay a final dividend of 16 cents per share, along with a special dividend of 53 cents. And we caught up with the CEO, Pauline Blight-Johnson, on how drivers fell behind low claims experience and how it's impacted the overall profit earnings.
Well, clearly we're still seeing continuing very low claims experience, which, whilst it's good for our business, of course, ultimately means it's good for Australians, that Australians are continuing to pay their mortgages and staying in their homes, which is a great outcome. We know there is stress out there, but the people are managing to continue to pay their mortgages.
Well, G8 Education has posted a 21% rise in full-year profit to $67.7 million. Revenue up 3.5% on the year to just over $1 billion. shareholders to receive a final dividend of 3.5 cents. CEO Payman Okwa telling us that he sees this year's growth a little slower than the previous period.
Part of this year, in short, has been a little bit slower than the previous year. One of the key components of that is the fact that some of the returning back to school days, state by state, differed. Some of the public holidays kind of slightly fell in a different place than last year, which meant families took longer holidays, and that's good for them. So therefore, they're returning back in terms of engaging with the sector. It does feel somewhere between 2 to 3 weeks behind last year. So it's been a bit of a slower start as a result of that.